I seen a post earlier today about because everybody's saying the correlation to the stock market. They're like, oh, we're not correlated to the stock market, or their correlation doesn't cause causation. Blah 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 blah. Right? Well, let's take a look at this. First of all, let me turn that off. Let's boom. Oh. So this right here is the S&P. See? Boom. There's your S&P, right? This goes from October of 23 to the present. Take that chart. We come on over here to the Bitcoin, and I'm sorry, but that looks pretty damn correlated to me, right? Correlation doesn't mean exact. Where the S&P kept pumping, we had a taper off and then a pump, but look, right back into the pattern. I mean, the ass end of it lines up right here. The front end of it lines up right here. I guess we're one bar off. Oh no, we're not one bar off. We are right on the money, because that's today's candle. Or that's no, we are one bar off. Either way. So see that we are definitely correlated to the stock market, and the stock market is not looking good, just like crypto is not looking good right now. But we have some hopium. So I didn't go back to the 2013-14 bull run. But what I did was I started taking some measurements and starting going through from the peak of the 17 to what we anticipate the end of the 2025 bull run being, right? So from the peak, we had 52 weeks to the bottom, all right? And that is an 85% correction. Then we had 152 bars to the top. And then we had 54 bars from the peak of 2021 to the bottom in 2022, which was a 75, where is it? There we go, which is a 75% correction, right? So if we take this and we extrapolate this out, I know this is only 2 data points, but we extrapolate this out and we put another 152 bars, right? And this could extend a little bit. I mean, the bear market extended by, or the dump extended by 2 weeks on this chart from here, 52 to 54. But we just left the uptrend at 152 weeks. And that puts the top of the market at October 13th. I don't think the top of the market will be October 13th. So that's why I was saying we could extend this out, say 4 weeks back in November, or, like the first week of December, when we start to get that end of the year, the people selling for whatever reason, and tax loss harvest, all that good stuff, right? So then if we take that and we anticipate, so 84%, and as more people come in and the prices get higher, we have less of a correction. If I had this, as a matter of fact, so this is Bitstamp, right? Let's go. So where are we at? Right here, right? So this is the peak of the 13, and the bottom would have been right here, right? In April of 13. So let's see here. Let's get that over a little more. There we go. Make this a little easier. So let's go from the peak, right, to the bottom. I guess this would kind of be the bottom right here. That's an 81% correction. 81. So In the 2013 run up, we had an 81% correction from the top to the bottom, right? So yeah, this is 17, everything. Okay, so 81%. So we go here to 17, it was actually 85% from the top to the bottom. I might not be on the exact top right there. 84% right there, right? Okay, move forward. This is the 2021 bull run. Let's bring that down, right? We have from the top to the bottom, we have 75% correction. So if our corrections are getting smaller, I think the 2013-14 was kind of an anomaly. It was a new asset. And then we start getting more money. We got institutions in. You know, some institutions came in right here. They're not selling, so we're not going down as far, right? So if we expect, I don't expect we'll dump more than 65%, right? And if you follow these trend lines, so this is from the bottom of 2018 bear market with the touch point at the bottom of the 2022 bear market and then extended out, right? So that's the bottom of the market. This one right here is from the bottom of the market following touch points along the major dips right here. I didn't do this because this is the COVID crash right here. So this is like a black swan anomaly. You know, we probably would have just kept going sideways right here, maybe got a little bit of pump and then came back down. So I used this touch point and then these two touch points and extended them out, right? And then you can see we even have on our way back down in 2022, look, we even had some accumulation right there, right? So with that in mind, I drew another line from the bottom of the 2022 and then touching this area right here. Get that up a little bit. Boom. So that would be this uptrend right here. So this essentially is this bull runs. Whoops. This essentially is this bull runs uptrend. And we could come all the way back and touch it. You know, we might touch it right in here. We might come back down to 73, 61,000, right? But that's not the main part of this. This is the overall multi-year trend line right here. We have bear market touch, and then extending, right? And we got 52 weeks in the bear market, 54 weeks in the bear market. So I added 2 weeks and put 56 weeks for the next bear market, providing that this is 152 candles to the top and calculated a 65% correction. That puts our correction after the blow off top or the peak of this cycle at 84,000. Where is it right here? At 77,000 or 76,000 right here. 77,862. So now when you account for a 65% correction and you bring that up, 226,000 by the end of this bull run. Does that make sense? Are you guys following my order of thinking here? And this could change. This could change. So like if we take this and we move this out, say it's a little bit longer, say we're really expecting the end of the bull run, we'll go to what? The end of November, or right there, 1st of December, we'll say that the bull run goes out, right? So then we got to move this out. And we're going to move that to the 1st of December, which moves the bear market, the bottom of the bear market, to the 28th of December the following year. right? Now that on the trend line, because you're going to have to move this up and over, you move it to the trend line, right? Move it to the bottom of the trend line. Come on. There we go. So that intersection is going to be 82,000 with a top of about 237,000. So if this logic and this line of thinking plays out, you know, we're well over a $200,000 Bitcoin. You know, it's not going to be exact, but I would say the range is from like 220 to 240. That seems astronomical to me. But I mean, it's math, right? And unless somebody, you know, explain to me if my logic, if I have some kind of fallacy in my logic. So that's, you know, we added 5 weeks, 157. You know, we added 2 weeks to the bear market. You know, if we backed up the bear market a little bit, maybe the bear market's not as long this next time because of institutions. So then maybe we actually come down to like 71,000. You know, say we don't get like a real true bear market, you know, and we start to pump again, because that would be Q3 of 26, right? Say that right there is the intersection. That puts us at about 74 at the bottom and about 226 at the top with a 65% correction. So I don't know what you guys think about that. Let me know in the chat what you guys think about that.
Join us at Rare Evo, the top blockchain conference, August 6th through 10th, 2025 at Caesars Palace in Las Vegas. The top blockchain projects like Algorand, Midnight, HBAR, ICP, Thorchain, and Igon, and many more are going to be there. This is definitely a must for blockchain enthusiasts and fans. Use discount code CryptoNightly to save on your tickets and to support the channel. Don't miss it. We can't wait to see you there. It's going to be a blast.